Stocks have corrected almost 5% in just 2 weeks. Maybe it's time for a shopping list. It's definitely time for insight and action. Here we go. Take a look at what has happened over the past really year, right? We've had this trend line, the very clear green trend line, upward sloping, we might add, going back to November, and we've had 1, 2, 3, and now 4 corrections of anywhere from 3 to 5% very consistently, and notice how they've stopped in each case right at that trend line, as we just have now on this 5% correction. You may remember on Monday, we showed you this chart and asked the question, are we there yet? We told you no. This is the percentage of stocks at 20-day lows. In other words, when you get down to that trend line, you see a lot of selling, and you had these climactic moments of selling. Well, on Monday, the line was here at 17%. Guess what? It's now close to 40%. In other words, what we've seen over the past several days has taken the market down that much farther. That many more stocks have sold off. Maybe we're trying to form some sort of bottom. We were down 100 earlier today. Now we're back to flat. So the question is, which stocks have seen above average corrections over the past 2 weeks and yet have significantly above average earnings growth? All right, and here they are. In the S&P 500, Avon, Host Hotels, Kimco, Kinder Morgan, Masco, Netflix, Noble Energy, Pulte, Range Resources, Weyerhaeuser. 10 of them. The stocks are down. The earnings are up. These were the 10 that were the strongest. I know I went over them fast. Don't worry. I'm going to post them on Twitter at AJ Insight. And here's the key. This is why you want to pay attention. Look at how they're doing year to date. Our shopping list up 26% versus the S&P up only about 13%. In other words, they have sold off over the past couple of weeks, but they're still outperforming. That's because they have earnings growth. Maybe it's time to do a little shopping, Trish.